Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action and 5 headlines. I'm Reema Tendulkar and these are the headlines for the day. The Sensex and Nifty end at their highest level in a month despite clocking modest gains. Reliance HDFC Bank contribute 50% of the Nifty gains. Broader markets rose in line with the blue chips. Bajaj Finance reports an in-line set in the second quarter. Asset quality improves. Net profits rise 28% versus the same period last year, while the NII rose 26%. Grasim plans to raise 4,000 crore rupees via a rights issue to repay debt and fund growth as it chases its pain's ambition. The promoters promised to subscribe to their entitlement as well as unsubscribe portion of the offer. SIA turns in a good show as lower material prices and a better product mix aids margin. The street takes a cue, driving up other tyre stocks. Access to ISRO's technology lifts data pattern. Newgen software soars in an all-round improvement in the second quarter. ICICI Security jumps as margins improve sequentially, while brokerage outlook drags Dalmia Bharat. And here's a lineup of what we have for you in the show today. It's a power-packed show in market opinion. We've got James Sullivan of JP Morgan. In Big Voices, V. Anantha Nageswaran, the Chief Economic Advisor for India, joins in with his views on private capex. We also have the CEO of Cyan DLM joining in with his Q2 commentary. But before that, a quick check on the markets and how they fared in today's trade. It's a range-bound session of trade. The frontline indices closed about 0.5% in the green. The Sensex and Nifty ending at a one-month high. Sensex gaining more than 250 points. Sensex rising nearly 100 points to close above 19,800. Leadership came in from Reliance Industries, HDFC Bank, which in fact contributed 50% of the Nifty gains. Broader markets moved in step with the blue chips. Prashant is here with the day's trading action. Prashant.
Well, we started the week on an absolutely flat note, yesterday that is, but today it was much better. We started the day with overnight cues which were positive. For US equities were up about 1.5%. Oil prices were steady, around $90, but not higher. And dollar index had also come off a little bit. So we got a decent start and we managed to hold on to those gains. Actually, it was a holding pattern kind of day. Across all indices, we ended with what we started with. Nifty, Bank Nifty on your screen, same 0.4% kind of gains. Mid-cap index a third higher, and the small-cap index did the best out of the lot, about 0.9% up. Now, on the large caps, gains coming through in names like Power Grid, life insurance companies like SBI Life, HDFC Life did well. BPCL, Coal India, the resource companies, and there was a Bajaj Auto which participated as well. Losses coming through in Tata Motors, L&T and UPL on the downside. Broader markets, lots of government companies across sectors. So, railway companies like Ircon, Railtel, fertilizer companies, second day running, FACT did well there. Standalone refiners, Chennai Petro, MRPL, ITI, STC, both these, of course, have got limited floats, so price moves can look exaggerated. But there were others, lots of others. VA-Tech, Vabag, Supreme Industries and JSW Infra, last 30-minute movers. Karur Vysya, good numbers. Tata Investment Corporation, Newgen reported numbers today. Inox Wind, Thermax, there was Latent View. Home First, which had been languishing, 5% up today. TRF and Inox Green were some of the others. There were some pullbacks as well. Market breadth was largely positive, though. Emphasis, Dalmia Bharat, PCBL. The last two, of course, results, reactions. Ceylon Exploration, GMM, Fodler and Zaggle were some of the others which saw a little bit of profit taking. We've been in this 200, 250 odd point range, and now we're at the upper end of the range, which is about 19,850 or so. And that'll be tested, provided global cues stay supportive overnight when we come back in the morning. Back to you.
Thank you very much for that. In market opinion, we've got James Sullivan, the Managing Director, Asia Pacific Equity Research at JP Morgan, who says multiple factors are being priced into the markets. He also lays out his views on the Indian economy and where it's headed.
So there's multiple factors being priced into all markets right now. I think in particular to U.S. rates, the JP Morgan forecast is that the Fed will remain on hold in November. That is consistent with recent commentary from both Fed hawks and doves. I think the critical thing to look at in terms of the U.S. economy right now from a macroeconomic perspective are the cross currents that you're seeing between monetary policy, where you actually have seen significant tightening. You've seen the private cost of borrowing go up significantly, as well as a strong dollar constraining future economic activity. The flip side of this, and this is important because it is starting to change, is the fiscal policy out of the United States. On JP Morgan forecast, we're forecasting a more than doubling of manufacturing impulse to overall Indian GDP from roughly 17% today to roughly 25% moving forward. We're seeing a more than doubling of Indian exports from just under $500 billion today to over $1 trillion. And from a longer term perspective, by 2030, we see the Indian economy more than doubling to $7 trillion US dollars. As it makes that journey in 2027, it will become the third largest economy in the world. So I would argue that we are seeing a structural transformation of the Indian economy from a medium to long-term perspective.
Indian economy going through a structural transformation over the medium to longer term. In fact, that gives me the cue to go across to the Chief Economic Advisor, V. Anantha Nageswaran, who said that the Indian economy is doing well. Private capex is being invested on the ground. Speaking to Lata Venkatesh, the CEA also said that U.S. inflation data for the month of September, Fed Chair Powell's speech on the 19th of October will suggest the path ahead for the global economy.
In 21-22, private capex grew 22.4% and kept up in 22-23 as well by 18.5%. And the contraction in 2021 was about 6 to 7%. And this is a consistent sample of 3,500 companies, and it is not based on announcements or intentions, it is actual cash flow. So money on the ground is getting invested. And this is as far as the data up to FY23 is concerned. FY24, September just got over, and hopefully by end of November, December, we will get early trends. And I think overall, I'm quite confident that private sector capital formation is not a futuristic story, but a current story. It is unfolding as we speak. So I am confident, therefore, that these domestic drivers would pick up whatever slack that may arise from the external side. And given the September CPI numbers in the US, and of course, I think a couple of days from now, Mr. Powell is due to give a speech at the Economic Club of New York, and we will get good indications as to how he views the situation. More importantly, the geopolitical developments can have a wide range of possibilities in terms of how they pan out from here. So that's the reason why I would tend to be not opening the champagne bottle right now on economic growth or, for that matter, tax revenues, etc. But we are doing well right now. That's a good point.
Let's get to the second headline then, and this is earnings reaction. Bajaj Auto reported its results for the second quarter. Numbers came post-market hours. The profit after tax has missed street estimates. It's come in at a little over 3,550 crore, though the expectation was for 3,600 crore. Abhishek is here with the key highlights. Abhishek.
It looks like an inline quarter if you take a look at the top line, and much better on net interest margin than what the street feared. So to talk about the NII, net interest income is at 7,197 crore. We are working with a poll of 7,208 crore. The PAT is slightly below our poll. It has come in at 3,550 crore. We are working with a number of 3,616 crores. So that is a miss of about 1.8%. However, calculation shows that the net interest margin decline on a sequential basis is just 3 basis points, which is very good given the fact that other NBFCs are facing cost of funds pressure and their net interest margin decline have been much higher. ROA and ROE, they remain robust at 5.2% and 24% respectively. There is slight capital consumption, but look at the AUM growth. AUM growth has been pretty robust, especially the SME, mortgage and the commercial segment. They have grown anywhere between 8% to 10.5% on a sequential basis, that is quarter on quarter. So business momentum remains strong as they continue to gather customers. Also, customers have been showing the average ticket size has been pushing up as well. So overall, would give a thumbs up. Looks like almost inline set of numbers for Bajaj Finance.
Okay, thank you for that inline set of numbers. Grasim is our third headline for the day. Grasim Industries is planning to raise more 4,000 crore rupees via a rights issue. This will be to repay debt. The company announced a fundraise on the back of its plans to get into the paint business. Nigel is here with the details. Nigel.
Well, the board of Grasim has given the green signal for them to go ahead and raise money via the rights issue, up to around 4,000 crore rupees. They've also said that in case the participation is a little less, then the promoter entity will go ahead and subscribe for the unsubscribed portion as well. As of the last recorded number, the promoter entity held roughly around 43% stake in the company. Why are they raising this money? Well, they've given clarity on that front. They say for the proposed capex to deleverage the balance sheet a little bit, and also they say for any kind of other general corporate purposes. The street was a little bit skittish on whether or not some part of this money will go towards a group entity, namely Vodafone Idea. But post this clarification, the street will be quite happy. What is the capex that they have outlined? Well, they've outlined a capex of more than 5,000 crores. And as of the last recorded number, they had spent close to around 1,400 crores. Also, the debt in books had ballooned up from close to around 1,700 crores to around 3,500 crores as per the last record. Brokerages, well, they're impressed. Whether you're talking about Citi, Morgan Stanley, or even Motilal Oswal, all of them have a buy or an overweight rating on the stock.
Okay, thank you for that. Moving on, the earnings season kicked off last week. What's the key expectation from the pharmaceutical name? So far, we've not had any pharma numbers, so it's a good idea then to brush up our expectations. Ekta is at the big wall. She's standing by with an overall analysis of how the second quarter is likely to shape up for the pharma and healthcare space. Ekta.
Well, expect a healthy quarter for pharma companies with revenue as well as EBITDA growth of around 12 to 15% year on year. Growth will be aided by sales of key drugs in the US such as cancer drug Revlimid generic and easing cost pressures as well as currency tailwinds. For the US, the street is working with as much as a 16% constant currency growth, mainly due to Revlimid generic sales and stable pricing pressure. Q&Q expect a flat performance due to flatter to stable Revlimid generic sales. Domestic growth is expected to be tepid at around sub 10% year-on-year due to a weaker monsoon, hence softer offtake in terms of acute therapies. Margins are expected to be aided by a better product mix, better pricing and normalizing cost inflation. Sun Pharma, numbers to be aided by sales in Revlimid generic along with the US specialty business. The street will watch for commentary on pending US FDA issues at Halol and Mohali. Cipla, along with Dr. Reddy's, will be aided by sales of Revlimid generic on a year-on-year basis, but likely to slow Q-on-Q. Cipla is likely to make around 25 to 30 million from the drug this quarter, and Dr. Reddy's could make as much as even $85 million. Commentary on a possible stake sale will be watched closely from Cipla. All eyes will be on Lupin as the company will benefit from inhaler Spiriva generic sales. The street anticipates the company making around $15 million from it in this quarter. Margins and profit could be aided by the strong US performance. Other companies to watch will be base business performance for Divi's Labs, integration of Viatris's biosimilar business for Biocon, sustained Q&Q recovery in Loris Labs and Gland Pharma numbers this quarter as well.
Thank you for that. Get into a break. On the other side, we'll be back with the headlines that we're tracking for you. Stay tuned. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. The fourth headline for the day is CEAT Tyres rallied 4% as the company's margins continue to surprise. The net profit has increased substantially, coming in at over 200 crore rupees on a year-on-year basis. Revenues too have improved. Sonia standing by with the details. Sonia.
Well, thanks a lot for that. As you rightly pointed out, the big positive surprise in CEAT's numbers is the margin. There's been a 230 basis points quarter-on-quarter improvement in the gross margins for CEAT, and overall margins have also improved substantially. Now, there are two key reasons for that. One of it is that the product mix for CEAT has gone up, which is they've sold larger number of two-wheelers, and a lot of the new two-wheelers in the premium segment have been fetching higher average selling prices, and hence CEAT has benefited from that. And the other is the fall that we've seen in raw material costs in the quarter gone by, both in terms of rubber as well as crude prices. Now, both of this together has led to a very strong operational performance. Although if you look at the key numbers, the revenue growth is still in low single digits, about 5.5% year on year, but it is the margin expansion that has been very healthy for the company. The other positive really is the improvement in the cash flows that the company has seen. So in the first half of FY24, the cash flows stood at over 7,700 crores compared to 4,000 crores same time last year. Brokerages are positive on the stock as well. They mentioned that the read-through is positive for companies like Apollo as well as MRF, JK Tyres as well, and hence these stocks are up and about ahead of their earnings. Back to you.
Thank you for that. Moving on, Data Patterns gained on the back of an agreement for licensing and transfer of technology with ISRO's in-space program. The stock gained close to about 5%. Vivek is here with the details. Vivek.
Well, that's right. So data patterns is in focus today. The stock is doing very well. Now, this is in continuation with the fact that the company continues to, go ahead and get sizable deals as far as and sizable transfer technology agreements as far as the entire defense vertical is concerned. So what's actually happened is that yesterday the company announced that it has signed a licensing and transfer of technology agreement with an agency known as InSpace. Now, what is InSpace? InSpace is an independent nodal agency that is actually an autonomous agency that comes under the Department of Space. Now, along with that, what actually data patterns benefits from is that data pattern now gets access to go ahead and develop miniature SAR radar capabilities. Now, what is SAR radar? SAR radar is synthetic aperture radar, and what the company says is that the company says the technology will enable SAR radar development by data patterns themselves. So space as well as defense, key focal point as far as data patterns is concerned. This is what is keeping markets excited on this particular name.
Thank you for that. Newgen Software was quite the star in today's trade, surging a whopping 12% after reporting a very strong set of numbers. If you look at the top line for the company, it's up 16.5% on a quarter-on-quarter basis, up 30% on a year-on-year basis. And remember, H1 is seasonally weak for the company, yet the company has been clocking in revenue growths of, close to about 30% plus in Q1 and Q2. In the first half of the year, its top line growth is close to 31%. Which is ahead of what the company has been clocking in. So historically, the company's done about a 20% plus kind of growth. Even this year, they're saying we're likely to exceed our historical growth rate of 20%, but the street expectation was more towards 20-25%. But they've done 30% plus in the first half of the year. Margins are up to 90 basis points. And if you see the margin trajectory for the company, typically margins are low in Q1 and they start picking up in the subsequent quarter. So it's an all-round performance, by Newgen Software. Even the bottom line has gone up by 60% on a year-on-year basis. Moving on then to some other stocks. Dalmia Bharat tumbled nearly 1% despite positive commentary from the management. The company expects volume growth to rebound in the fourth quarter of this fiscal, but brokerages have put out a mixed outlook. Nigel is back with us. Nigel.
Well, the key highlights coming from Dalmia's con call was that the price increases of around 30 to around 40 rupees per bag in East and South India, well, that's been accepted and absorbed. So that's pretty good news. The other factor they say is volume growth could be a little bit tempered for one more quarter, but they expect to outperform the industry from quarter 4 onwards. They also say that the JP acquisition, they're expecting it to get closed out in this fiscal itself. And for that purpose, the capex that they've laid out is close to around 6,500 crores for the year. Out of that, nearly 3,500 crores will be towards these JPA assets. Nomura, well, they have downgraded the stock to neutral, and they say that they're lagging in terms of market share because the company, remember, in the first half of the year, their volume growth has been much lower in comparison to their peer set. They also say that there's no clarity with regard to the JP deal. So though the management believes it will close out in this year, Nomura's factoring in that this deal gets closed out in the first half of next fiscal. Jefferies, on the flip side, they have a buy rating. They've gone ahead and increased their target price. They say that the second half of the year could be superior owing to the price increases that have come through.
Thank you for that. Sign DLM is another stock rallying 2.5% after reporting its Q2 numbers. The company registered a revenue growth, though margins took a hit on account of elevated material and employee costs. The CEO of the company says primary sectors like aerospace, defense led the growth. Listen in.
And we did have a very strong quarter as far as growth goes. This was a record quarter in terms of overall the business we've delivered in the history of Cyient DLM. And so the primary sectors that a lot of that came from is aerospace and defense, and then followed by industrial and medical. And we continue to see strong momentum in those segments. Those are our core focus segments.
Okay, and L&T Technology also reported numbers which came post-market hours. Well, Q2 is a good quarter for the company. They've reported a dollar revenue growth of 2.9% sequentially. Margins have come in at 17.1%, which is ahead of what the street was anticipating, but it's, flat on a quarter-on-quarter basis. The bottom line, too, has come in at 315 crores. So Q2 is a good quarter for the company. But the company has lowered its FY24 revenue guidance. They had started the year predicting a 20% top-line growth, But now they're saying the top line growth is going to be 17.5% to 18.5%. In fact, even post Q1, when the company reported the Q1 numbers, Street said, well, the full year guidance does look to be a little bit, ambitious. And now, the company has gone ahead and lowered the full year revenue forecast. We've got a statement coming in from Amit Chadha, who is the CEO of the company, and we could just play out that, statement for you, where he talks about the guidance cut, that while the overall outlook for ER&D continues to remain fairly positive, at least in the near term, there appears to be incremental headwinds from the macroeconomic stress in various geographies. They are seeing longer decision cycles, and therefore they are lowering their full year guidance. So that could weigh on the stock. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.